but we are glad that you're able to join us here for the next few minutes. And if you're interested in learning how to save money on taxes, you found the right webinar. You're going to hear strategies and provisions on how to save money on taxes that are often overlooked, and things that you should be aware of when looking to reduce your tax liability in your business. If you have questions during the webinar, please send them to us through the Q&A box at the bottom of your screen, and at the end of the webinar, we'll see how much time we have to answer some of those questions. I have Tim Beiler with us today. Tim, good to have you here.
Glad to be here, excited.
All right, great. Tim Beiler is the co-founder and CEO of Paradise Energy Solutions. He comes with a NABCEP certification in PV installation and technical sales. In addition, Tim has completed 150 hours of studying the IRS code and has passed 3 exams required to apply for enrolled agent status with the IRS. Tim also puts his money where his mouth is and is actively invested in solar to the tune of 3 megawatts. And just to give you context, that's enough power to give 350 homes. So Tim, it's quite apparent that you know a thing or two about solar.
I hope so. I'm still learning a lot.
All right, great. As well as looking for ways to shelter taxes.
Absolutely.
So we're thrilled to have you here and to be our expert today. It seems that a lot of businesses spend a lot of time looking for ways to generate profit, increase their revenue, how to make money, and rightly so. But there are also significant opportunities to save money as well that businesses should not overlook. An IRS auditor told someone when he was auditing them, he said, you need to stop thinking of it as your money. You know, when we earn $1 or $20, you know, it's easy to think of it as ours. And it's really hard to give, you know, $3, $5, $8 back of what we earn. But there is provisions that allow us to keep more of our money. And these are IRS provisions that you should be aware of as you look at ways to reduce your tax liability. Our key objectives for this webinar, we have 3 of them. One is to gain an understanding, to give you an understanding of how the new tax laws will impact a solar investment. The second is to learn about the solar investment tax credit, MACRS Depreciation, and Bonus Depreciation. And then lastly, identify several key non-solar related tax changes or pass-through entities that would change your tax liability in this year 2018. So Tim, with that, I'm going to ask you, so what are some important things that people should be aware of when looking at reducing their tax liability, maybe in the context of a solar investment, and kind of walk us through what you have prepared for us today?
Sure thing. Thanks for that introduction, Charles. And he mentioned keeping it more of your money. And sometimes we really get focused on earning money. We want revenue with our business. We want top line growth. And sometimes we can get so excited about the top line, we forget that there should be a bottom line too. So if you're a business owner, would you rather have $10,000 in new revenue or $10,000 in savings?
Both.
Both. Okay. Well, that's right. That's a good answer. Well, see, the $10,000 in new revenue, you're going to have costs. And let's say you have a net profit of 10%, that turns into $1,000 in the bottom line. If you can save $10,000, that's $10,000 to the bottom line. That presentation is really focused on what we call pass-through entities. So a pass-through entity is a business where generally the business doesn't pay the income tax. The business owners have the business income pass through, hence the word pass through, to their personal income and personal taxes. So these are businesses like LLCs, partnerships, sole proprietors, S corporations. Those are the main ones. So this presentation is not focused on a C corporation, which is really a different type of taxation than what we're talking about here. We find most of our clients are pass-through businesses.
So when you're saying pass-through, you're talking about the taxes that pass from the business down to the owner or the principal?
That's correct.
Okay.
Yep, and they pass out to the owners based on their percentage of ownership. And of course, we are not, even though we like to think of ourselves as experts, we are not tax professionals, so please consult your tax advisor for your particular situation. So Tax Cut and Jobs Act. What did the Tax Cut and Jobs Act accomplish? I think of it, I think it's actually named fairly well. I think it's focused on lowering taxes and creating jobs. There was a lot of talk before this bill was passed about tax reform. Now, this did reform some areas of the tax code, but generally the same structures in place, and it's more of a tax cut. So not a lot of what I would call reform, and there's also a lot of talk about simplification. There was some of that happen, but there was also sections that became more complicated as well. So, there's things kind of traded, like, well, let's take this deduction away and we'll add in this tax credit, things like that. So not necessarily a simplification overall, and not necessarily a tax cut for everyone either, although on the average will be. So there's a lot of things in the Tax Cut and Jobs Act that we're not going to cover today. Many of them are good for business. But we're going to touch on a few key items and look at that. First of all, how it impacts solar, and then a little bit of overview in general. So the solar investment tax credit. The solar investment tax credit is a credit of worth 30% of your investment in solar. So let's just say you invested $100,000 in a solar array. You're eligible for a $30,000 credit to your taxes. That's not a deduction, that's a credit, which is worth more. So let's say you owed $30,000 on your taxes. Now you can effectively not owe that anymore.
So I need to owe it otherwise to realize it.
That is correct. Yep, this is not refundable. So if you owed zero in taxes and you have a $30,000 tax credit, it doesn't come back to you in cash. We'll talk a little bit more just soon about carrying it back and carrying it forward. But that's generally the case. So the credit largely remained in place as it was before this bill was passed. The credit percentage is now 30%. It's scheduled to be reduced actually in future years. It's 30% if you start construction on projects by 2019 by the end of the year. And in 2020, it drops to 26%, 2021, 22%, and then actually 10% beyond that. So looking at the carry back and the carry forward. So in the event that the tax credit exceeds what you owe, as you mentioned, if you don't owe the taxes, but you have the credit, you can actually carry it back to a previous year, and basically go back, amend the previous year's return, and get the money back that way. If there's still excess tax credit after you do that, then it can be carried forward up to 20 years.
Is this one of the few tax shelters that you can go back and get prior year taxes?
That's a good question. Actually, with the Tax Cut and Jobs Act, some of that multi-year and back forth thing has been tightened. It's not as available as it used to be. I think it's a little more unique to the tax credit. I'm not very familiar with some of the other tax credits. They may allow this as well.
So it is somewhat unique to solar, though.
Yes.
Definitely, if you're looking for a tax shelter.
Yep.
And even if I didn't pay any taxes in the current year, you're saying if I owed taxes the prior year, I can go back and get those.
That is correct. Assuming you have more tax credit this year than what you owed. So if there's excess tax credit again in a given year, you can carry it back. So if you had a windfall one year, you really got hit with taxes and it really hurts, and this is something you want to consider. All right, 100% bonus depreciation. So there's a lot of words here. Maybe you heard these terms before. Hopefully I can break them down in ways that make sense and hopefully simple. So there was a significant change in regards to bonus depreciation with the Tax Cut and Jobs Act, and that's the ability to claim 100% bonus depreciation on a solar array. Now, what that is basically it allows you to take the cost of the investment in the solar array and depreciate it all on your taxes, depreciate it similar to expensing it in the year that it's placed in service.
So they don't look at the useful life then and say it needs to be depreciated over the useful life?
That's kind of the standard method, but 100% bonus is a special allowance to allow you to take it all in year one. So this is really significant.
Is this unique to solar, or is this?
This is also for a lot of different equipment actually. So it is for other things as well, but it's a great opportunity with solar.
Okay.
So just a note on Section 179 deduction. A lot of people are familiar with that. You're used to, maybe investing in a vehicle, investing in some kind of equipment, and claiming, Section 179 is what we call it, on that equipment. Be aware that while solar is eligible for Section 179 deduction, you're not allowed to claim a tax credit on property where you claim Section 179 deduction. So generally, it's a bad idea to use it with solar. Fortunately, with 100% bonus depreciation, you get the exact same effect. Okay. So 100% bonus depreciation is pretty much the same dollar impact on your taxes as 179 deduction would be. And this 100% bonus depreciation has no limit. Okay. Section 179 is limited every year. Right. There's some tests. 100% bonus depreciation has no dollar caps or anything.
Okay. So how do I understand what depreciation benefits me?
Great question. And what is it? What's the alternative to bonus depreciation? Why should I care? Mm-hmm. So generally, the IRS allows us to depreciate or write off the cost of investment over its useful life. Mm-hmm. So before we had 100% bonus depreciation, solar's useful life is considered to be 5 years. Okay. So that's what they call the MACRS Depreciation, and that's basically just an acronym for their description of how they think about it. But MACRS Depreciation will allow you to write off part of the cost every year over 5 years. And now with bonus depreciation, you still get that same amount of dollar write-off. Mm-hmm. It's just instead of spreading it out over 5 years, you get it all in year one.
Do I have to use it all in year one, or can I choose to spread it?
Great question. You actually can still opt out of bonus depreciation. Okay. And if you're in a financial situation where you'd like to spread it out over several years, you still have that opportunity to do that, and then you'd be back on the 5-year schedule. Okay. Another thing I'll note, 100% bonus depreciation is in effect through 2022.
Does it phase out then, or?
Great question. It does actually phase out. So it phases out to lower percentages. Okay. So the next year, I think it goes to 80% or something like that. So now you can do 80% of your investment write-off in year one, and the remaining 20% it stays on the 5-year schedule. So kind of to summarize the benefits of solar, which are incredible. I mean, you look at 30% on the tax credit, you look at 100% bonus depreciation, and that adds up to a significant savings in year one when you invest in a solar array. I mean, we have business owners that are saving probably well over 50% of their investment. They're saving that in taxes in year one. Mm-hmm. That's pretty significant. That is significant. I mean, what kind of investment can you make that when the investment you get over 50% of your money back in year one? So that's very significant. All right, so I wanted to take a peek at a few other things in the Tax Cut and Jobs Act and just help us understand what's the big picture, what are some things going on here, because there's some really nice pro-business parts of the tax code that were put in place here, and they've been marketed pretty well in my opinion. So. But there's also some things that were lost. There's also some things that went away, and we don't necessarily hear as much about them. So one of the things that was lost was the domestic production activities deduction. I call it DPAD for short. And I'll get into that a little bit and what that is. The other thing that there's now a limit on the amount that you can deduct on a tax return for state and local taxes. That's limited at 10,000 now. That was actually fairly controversial, and you may have heard about that. So back to the domestic production activities deduction, that was basically a 9% deduction on self-employment income. So let's say you had $100,000 of business income, you're self-employed, you could deduct $9,000 and you didn't have to pay tax on that 9,000 out of 100. So 9%. And that wasn't for every business. It was designed to promote domestic manufacturing. And so it was kind of industry specific. So that's now going away.
Okay. So was this what was causing people to want to pay their property taxes early?
Yeah, the $10,000 limit.
Okay.
Yep. That's what was creating that rush at the end of the year and created quite a stir. You saw some of the states kind of push back and say, we don't like those rules, but we won't get into that. Now, one of the things that was gained with this is a new 20% qualified business income or QBI deduction. So they took away a 9% and added back a 20. Now, it's not that simple. We're going to get into the details here. So the domestic production activities, again, let's understand what we used to have and has gone away. That was in place for years. That's repealed with the new tax bill. And that was, again, a 9% deduction. And that was calculated before AGI. Now, the AGI is an adjusted gross income. Now, the reason that matters is because your AGI can affect your ability to claim different credits or deductions, be it itemized deductions in the past or child tax credit, things like that. If your AGI was too high, you couldn't claim it. So the DPAD actually allowed you to lower your AGI, potentially improving your opportunity to be eligible for these other tax benefits. And that deduction was also claimed on wages and salary for self-employed taxpayers. It's kind of like all the income you had from your business, whether it was your compensation or whether it was profits at the end of the year, you could claim the domestic production activities deduction. Back to the state and local tax deduction, that was limited to $10,000 per tax year per return. The thing is, my understanding is this not only applies to personal income tax and real estate taxes on a personal residence, but also applies to state and local taxes paid for business income and real estate taxes on property owned by a business. Because again, remember that tax and those taxes, the deduction for the taxes would pass through to the personal tax returns. So that's a concern as well. Now let's look at the new 20% QBI deduction, the qualified business income. Again, a new provision is for pass-through businesses, and it's a deduction of up to 20% of income. Now, there's kind of two key things that you got to watch here. There's actually some industry-specific limitations that I'm not going to get into, but assuming those don't apply to you, which you shouldn't assume that because those are real and those focus on service industries. But the thing is, this is calculated after your AGI. So this deduction or this 20% deduction does not reduce your AGI. So if your income was too high for whatever tax benefit you're interested in or that you're used to using, this doesn't lower it. So now, with this change, the adjusted gross income year over year for a lot of people actually go up, right? Because this qualified business income deduction does not reduce that.
Therefore, resulting in them paying more taxes.
Yeah, potentially. Yeah, it results in a higher AGI, which may make you ineligible for certain benefits. The other thing, and this is a big one, is that you cannot claim the 20% deduction on your salary or your wages from being self-employed. So, smaller businesses where maybe a lot of your business profits is actually your salary, it's your take-home pay. You really lost something here because you used to be able to claim the 9% on that. Now you can't.
Is there any correlation between AGI and the alternative minimum income tax?
That is a really good question. Not other than in general, the higher your AGI is, the more likely it is you'll be subject to the alternative minimum tax. That's a pretty complicated question, but the higher your AGI, the more likely you're going to be subject to AMT. So that actually could impact that as well.
Fair enough.
Now you might say, well, I'll just reduce my wages and I'll just have more business profits and I'll just do business distributions to myself as the owner so I can claim the 20% deduction. Well, that's a great idea, but the IRS has said that you have to pay yourself a reasonable wage for this, so that you aren't basically avoiding this limitation they've made.
Do they bring any more clarity to that?
I expect they will. Okay. Right now, it's really kind of nebulous, okay. But I think they try to look at, what do you pay people in your business? What kind of work are you doing? What do you pay employees to do that? Okay. But anyway, that's what they've said. So they're gonna, I'm sure that's gonna be a targeted enforcement area in the future as well. So don't underestimate the impact of the limitation on your salary or wage income. Another example of trade-offs is we saw an increase in the child tax credit. You know, for children 16 and under, that credit went from 1,000 per child to 2,000 per child. We also saw the income level before you phase out of that. The income level moved up quite a bit.
Do you know what that moved up to?
I think for a married filing jointly, it's like 400,000.
Okay.
Yeah, and it used to be like 110.
Yeah. Okay.
Yeah, so that's moved up significantly. So that's nice. But you got to realize that there used to be a personal exemption for everyone in your household of about $4,000 per person. And depending on your tax rate, that might have been worth 1,000 or a little more. So
can the child tax credit actually give me a negative number in taxes owed?
That's a great question. That was one of the things that was negotiated right before the passing of the bill, where yes, they did actually make a portion of it refundable. I think the number is $1,400.
Okay.
So even if you don't owe the tax, excuse me. Yep. Even if you don't owe the tax, you can get a portion of the 2,000. I think it's $1,400 actually paid out whether you paid it in or not.
Okay. So if I have 2 children and I have a $4,000 tax credit, but I only paid $3,000 in federal income tax, will I get a $1,000 check back when I file my taxes?
No, I don't think you would. But if you would owe 0 and you had 2 children, you would probably get $2,800 back. Yeah, so they won't pay the full 2,000. Okay. They'll give you the first 1,400. Okay. All right. So that's another example of trade-offs where you have, you know, there's this like, yeah, we increased the child tax credit, and they did, but there's also the personal exemption that's going away. Okay. And so depending on your situation, this could work against you. If you're like me and you have a lot of little children, you know, this isn't bad. Right. And like you, right? Yeah, exactly. All right. So that's one of the other things to be aware of. So kind of to summarize here, actually before the summary, some things we didn't talk about is that there are changes in the tax rates and the brackets. You know, that was pretty well marked out. I'm not going to get into that today. Generally, that's lowers tax, you know, for people. Taxes are reduced. And, you know, it's worth mentioning too, that generally higher income taxpayers are positioned best under the new code. That's the way it was written. And generally higher your income, the more of a reduction you get based on new tax rates and the brackets. So to summarize for the solar projects, you know, solar investment more than ever is a great way to take control of your taxes and to reduce your taxes significantly while you're also reducing other costs in your business. You know, we sometimes look at payback period with our solar projects, and I think sometimes what people miss is how much of that payback, that return, is front loaded. You know, in year one.
Because of 100% bonus depreciation.
Yeah, and the tax credit. You know, you can get, again, in some cases over 50% of your investment back and save taxes in year one. And so, you know, that very quickly, you know, sometimes people think about, well, should I invest in solar or should I invest in something else? But investing in solar and keeping the money that you would have paid to the IRS allows you to go do those other investment things because you get the money back so quickly.
So what you're saying is it's money that I would have already owed. I wasn't able to keep it already. So now I keep it and I invest in myself.
That's correct.
It's one of the few ways I can invest my tax dollars in myself. And also I have that expense of electricity.
Yep.
So now I'm reducing an expense as well as my tax liability. Excellent.
Yep. And you know, business owners are generally paying estimated taxes. So, you know, if you decide to do a solar array, you can, you know, talk to your accountant and probably immediately reduce what you're paying in estimated taxes. So you don't necessarily have to wait till tax time to even realize some of this. You can, but that's something you'd want to discuss with your accountant. All right. With that, I am going to turn it back to Charles and to wrap things up and look at any questions.
Very good. Well, thank you, Tim. that was very informative, and I think a lot of good information. There is a link that we will send out afterwards that will take you to a contact page. If you're interested in learning how solar could be a good fit for you, fill out that contact form, and someone from Paradise Energy Solutions will be contacting you within a short period of time, and give you an honest opinion about how solar could fit, work into your situation. And then we encourage you. We put together a fully developed proposal for your situation that you can take to your accountant and say, hey, can I use the depreciation? Should I take 100% depreciation? How many years will it take me to use my tax credit? And we can really customize a proposal exactly for what your situation is. So are there any questions that any of you have for Tim? So
if you're on Facebook Live, message those in. If you're on the webinar, you can put them in the Q&A box. We'll be glad to look at it.
All right. So I have one question here from Andy. I have a sole proprietorship with a basic business license. Do I need to set up an LLC?
So that's a great question, and I think the answer is probably not necessarily. So if you have a sole proprietorship, it's probably just you involved in the business. Setting up an LLC might give you some additional liability protection, depends what industry you're in. But in terms of how that affects the taxes, it's probably going to be more or less the same. So I think that's more or less a question of tax benefits, because that's going to be about the same either way. And that's going to be more a decision on your end of, is there risk of lawsuits in my industry? Am I doing things that could cause property damage? Things like that, because the LLC is effectively, it's a limited liability corporation is what it stands for. So it basically creates a bit of a separation between your personal assets and your business. So it's harder for people to, for instance, file a lawsuit that harms you, and basically they can access your personal assets.
Very good. Another question, is any of this in TurboTax? So if I do my own taxes and I buy a solar project, will I be able to, I do my tax on my own, I think is the question, or am I going to have to go find an account?
That's a great question. Now, there's some things that aren't said there. I don't know if that is a, from a business perspective,
probably more an individual.
Yeah, if you invest in a solar array, let's just say for your house, which we didn't really cover here, I would think TurboTax would cover that pretty well. If you're, if you're doing this in a business, the business basically issues what they call K1 statements in a partnership, or in most partnerships, LLCs, C corps, there would be K1s issued, and maybe there's an accountant involved on the business taxes to issue the K1s out to the to the owners. I don't know if TurboTax is really into the business software or not. But if you have that K1 from the business, I would think that TurboTax would support that as well.
All right. Any other questions? Okay. Well, hey, we appreciate your time. Hopefully you found this as a value add for you. Thank you, Tim, for being here and for giving us a lot of good information.
Sure thing. Glad to be here. Enjoyed it.
Again, if you have any interest in looking at solar in any capacity, whether it's with the tax shelter or just reducing your expenses, therefore increasing your profits, we'd love to chat with you, and we'd have one of our consultants reach out to you. So with that, I think we will end the meeting. Thanks again, and we wish you all a very blessed day.
Thanks, everyone.